Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, it's time to update Bitcoin market. So today we do not need a high time frames monthly and weekly because you can see the price stands in relatively tight range. And as we have talked about, this is a normal thing when the market shows the stabilization after the strong performance and collapse, and it has to go inhabit with the new levels. In the new market reality, what is going on and what to do. So as usual, it's a really big thought in minds of the investors. And as a result, market becomes a bit more quiet and turning to some consolidation. Currently, market stands actually in the range within the more than 2 weeks of this last collapse to the 30 even completion of the XLP on the weekly chart. So this target has been completed. This spike down in market since then stands in the range of this candle. So currently it's obviously that we have the triangle pattern forming on a daily chart. As you know, the triangle actually, as a rule, it's a continuation pattern, and in general it keeps the door open for both directions, because you could build some patterns to the upside, some kind of the butterfly or some upper breakout. At the same time, you could build the same butterfly to the downside that we have done previously, and suggest that market still could retest the 26 area. So by taking a look at the current performance, guys, and especially at the eve of the non-farm proposal is, so it definitely will make impact some on the dollar, and as a result it also could bring some impact on Bitcoin. This type of action is very gradual and slow, and it's very difficult to treat it as rebounds and recovery of the market starting the upward acceleration. Second moment that looks a bit bearish here is that price action stands flat with a turning trend to the bull. You can see the bullish side. So this might be the indication of the bearish dynamic pressure that suggests the drop down, taking out of these lows, and still reaching of the 26 area. What I would like to say is that based on the current performance, I wouldn't totally deny the chance that market would retest the 26 area. It's still possible here. On the intraday dynamic, so if we'll take a look at the intraday charts, here on the 4 time frame chart is nothing new. On the hourly chart, that's the price action that has happened after our hand and shoulders on the hourly chart. If you remember, here's what the hand shoulders we said. If you would like to trade it, you could try to catch some scalp patterns when taking the position based on these patterns, like hand and shoulders, and it's, well, has shown not bad performance in general. Market currently is coming to the final target of this pattern, which is the XLP 1618 extension of this ABCD pattern. That stands at 39.37. Also, you can see it agrees with the minor fib level, 786. It's not the major level, it's minor, but since market stands inside the triangle, that's the level to consider. So currently, guys, you could try just to make the position with the anticipation of some events, because inside of the triangle and based on the triangle, you can't choose the correct direction. So it means that you have just two options. First is to wait for clear patterns and do nothing currently, when the triangle will shift to some other pattern, as I said, maybe to the bullish butterfly or to something else, and you will take the position with the confidence. Second, you'll take more risk and try to anticipate this performance, either to the upside or to the downside. In the case if you will get lucky and you will be correct, you will get the perfect position and your result will be very good. In opposite direction, conversely, you will get your loss on the market. For example, on a 4 different chart, everything, or better on daily chart, everything will turn around the swings that you have. For instance, for taking the long position, you could consider using the stop buy order somewhere above the stop, above the 41 area. In this case, more chance that you will get upward continuation, because downside pattern will be erased. The same story, if you'd like to go short, you could try to take the short position, for instance, around the resistance and completion of the XOP target with the stops around the same area. Stops about this area, because if market will climb here, potential butterfly will be erased and the bearish context will be destroyed. Otherwise, if you will be covered somewhere from this level, downside action could start and hit the 26 target. So by the risk-reward ratios, overall stops are really not bad. But, as I said, the major risk stands around lack and inability of clear patterns yet. So this is the major risk. So currently, you will have to choose either trying to anticipate and take the positions that I have just discussed, or more conservative approach, as I said, is just wait and see what shape price will take after the triangle will be broken, what patterns will be formed.